Which brings me to the next thing. It's proven. Real estate's a proven asset class for 2,000 years. I think the Vatican's what, 2,000 years old? Still there, still people coming to it, still paying money to see it. Um, there's probably real estate in your city right next to where you live that was built in like the 40s, the 50s, the 20s, depending on where you are in the United States or in your world. That some of this stuff may have been built in the 1800s. Still producing money, people still live there, people still pay their rent. That's the difference. It's a proven asset class as a vehicle for people to be able to invest their money in, get a return from. That's huge. That's why successful people continue to use real estate as their vehicle. And then it's hard to disrupt. Me and a buddy were talking about this. We were laughing about it yesterday. We're talking about the guy. I don't know. I didn't read the article, but he was telling me. So correct me in comments if I'm wrong. He was like, I guess the guy that's going over to Meta that they paid $1 billion for to run like their AI stuff, he was saying he was waiting to have kids until like, I don't know, like the chips are done so he can put some download, put something in their brains. And we were laughing. I was like, well, even waiting, if you're going to wait to have kids for that, that's great. But real estate's probably a better play, right? Because that kid with that chip in his head is still going to need somewhere to live. People will always need a place to live. So real estate is very hard to disrupt, right? Especially multifamily real estate. Uh, but here's the other side of that. Let's just say the only way to really disrupt real estate's disrupted when there's a debt problem. Like right now, Powell and raising the interest rates and stuff, it actually slowed the market down where the big players couldn't go get debt, and that caused real estate to slow down. Not gone, not when I say disrupt, I mean gone. Like Kmart, gone, Kodak, gone, Polaroid cameras, primarily they're gone, right? Because you can't get the film. All of these things are gone. Sears gone. JCPenney's is gonna be gone. It's dying. I think it's a zombie company now. Like at some point, real estate's not multifamily real estate rentals, housing is never gonna go away like that. If the only way that it could be disrupted is if, and I think it could happen, is that they start being able to build homes and properties in multifamilies, like printing, like AI printing. They're already doing that. They already made like a Walmart. I think they just have a development that's going on in Austin right now that they're doing printing. So they're printing by building the home. So all the homes look like, the freaking Michelin man with those with the lines in them, but they're really nice. So the cost to be able to build those homes and the timeline it takes to build them is faster. So that could disrupt housing. But here's what that's going to do. One, you can't buy the equipment to do it as an individual, so you're going to have to invest in the company. I think it's Pulte Homes, DR, hold like it's a developer that's doing it as a test. But here's the thing: once that happens, the cost for the land will be so high that land is going to skyrocket. So it's still going to be a great investment. So yes, housing, the way housing can be disrupted. It can be AI print. You can print houses and you can knock out what would have taken 24 months to build a whole development. It could be done in 12 months. So you cut off a year, but the land to do that now will be skyrocket. Because if I have land and you want to print, I know you're going to do it. I'm going to rape you at closing. I am. I'm going to be like, dude, you're going to pay my investors a ton of money if we're going to do this with you. So as it relates to being hard to disrupt, that is how it could be disrupted. It could. The cost of land's going to go up though. Something's going to happen for you to still be able to use that vehicle to make more money than you could in the stock market, your retirement account, all this stuff. So this is why all the successful people I know, entrepreneurs, business owners, doctors, lawyers, professionals, all of them tend to move their money at some point in their lifetime to real estate, less risky real estate. I'm talking about long-term investments. If you're like 60, 70, 80 years old and you don't want to lock your money up for 10 years or 7 years or something, okay. But here's the problem. You're going to put your money into something that's more risky and it's not going to have the tax benefits that are going to pass through to you. So if you're 60, 70, I still say put your money in real estate. But it's got to be something that cash flows, protects your capital, and it's got to be something at some point when you're dead and gone, you can leave it to your family. You can push cash flow to your family. If you're in an investment deal. That's my goal for you guys. If you have money in a retirement account, you're 40, 50 years old, you don't need money right now. You need cash flow. You need to be able to focus on your income, your business, and grow your revenue and let your money work for you and let me go to work for you. And then you pump that over through your retirement account. The money goes back to your retirement account and you still have a piece of that real estate deal. So when you move on, you can have that move on to your family. You don't have to liquidate the real estate. You don't have to liquidate the asset. You don't need to kill the goose that's laying the golden eggs. You just need to live off the eggs. That's how it should work for you. But everybody's not taught that.